Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, 30th of June, 2024. I'll be doing the weekly market review. Starting with the XY, here we have the weekly time frame chart. As you can see, we reached the rejection block that I've annotated earlier on the weeks before. We have a weekly fair value gap between this candle's low, this candle's high. Price might retrace, work inside the weekly fair value gap before running up higher towards the buy side liquidity. We're still in the buy program on the XY, and we never try to pick the top in a buy program, and vice versa. Diametric opposed to the sell program, we never try to pick the bottom in a sell program. Going to the daily time frame chart, as you can see, we have here a daily fair value gap between this candle's high and this candle's low. Price broke down lower, run it up higher, fair value gap, bullish order block, bullish breaker, excuse me, and then run it up higher. We have a bullish order block here. Price is traced to the bullish order block and run it up higher. We have a daily fair value gap here. This candle's high, this candle's low. Price works inside the fair value gap and the bullish order block. And actually, this is a bullish propulsion block and run it up higher. Another bullish order block, and you can see how it traced. Nothing inefficient here. We can also have a small volume balance right there, and we reach to the rejection block. From here, it can retrace, work inside the fair value gap, the weekly fair value gap right there, weekly fair value gap high, weekly fair value gap low, and then rally up here towards the buy side liquidity here. We have relative equal highs here. You can think of this as a market maker pie model. So that's going to be pretty much it for TXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we have an inside week where the high is lower than previous week's high and the low is higher than previous week's low. This is indicative that smart money or market makers are accumulating orders, accumulating buy side liquidity and sell side liquidity above, buy side liquidity above the marketplace here above the highs, and sell side liquidity below the lows. Here, if we're in a buy program, I would ideally want to see price breaking down lower below the lows and reaching to the fair value gap. Breaking down below the lows, reaching to the fair value gap, accumulating orders here, and running up higher towards the buy side liquidity right there. Going to the daily time frame chart, these two lines are just showing you that we're inside week between Monday and Thursday of previous week. So Monday this week, Thursday last week, we're pretty much in that range. So if you want to see a run up higher or want to see a buy program, a continuation to the buy program, because we're actually in a buy program here on ES. If you want to see a continuation to the upside, we want to see a breakdown lower below the lows here, potentially reaching and filling this fair value gap. We have bullish order block, the weekly bullish order block, and we have this bullish order block too. Price might retrace and walk inside these levels, and then rally up here to take out these two highs. So that's how I'm looking at it. That's going to be pretty much it for ES. Going to NQ. Here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price when compared to ES, price formed a lower low here. So this is not an inside week. Price retraced, took out this low and work inside this fair value gap. Going to the daily time frame chart, you can see Thursday's high and Monday's low. We have equal lows here. Still, if price wants to run up higher, I would think that it wants to trade down lower because this is the starting of a consolidation between this range high and this range low. I want to see if we want to break out of the consolidation area between this high and this low. I want to see a breakdown lower below the consolidation. This is if we're in a buy program, and this is the case on NQ. I want to see a breakdown lower below the lows and then rally up higher towards the highs. That's how I'm looking at it. Below the lows, we can fill this fair value gap and reach to the bullish order block and then rally up higher towards the highs here. So that's going to be pretty much it for NQ. Going to down, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we walked more deeply inside the weekly fair value gap between this candle is low, this candle is high. From here, we're expecting a retracement towards and a continuation actually towards the sell side liquidity and the sell side liquidity right there. Going to the daily time frame chart, as you can see, we broke down lower, created a daily fair value gap. This candle is low, this candle is high. and we have this weekly fair value gap high and the weekly fair value gap low. After we forming a buy side liquidity just below these levels, these BD arrays, price run it up higher. And this week here, Monday, we run it up all the way up here. And I get some questions. If price traded above the weekly fair value gap, to which price can it trade to? To answer that question, since that weekly fair value gap is on the weekly time frame chart, we nest it down to the daily time frame chart and we look for BD arrays just above that BD array. So in this case, these two lines indicate the weekly fair value gap. Just above these lines, we have this daily fair value gap between this candle's high and this candle's low. So we'll be also considering the corresponding of that level and the 75% quadrant and the high of the week of the daily fair value gap. Now, if price really wants to overshoot, it can overshoot to this volume imbalance right there, which I don't think it's going to. Why? This is a question to you. Why would it want? Why would I not think price would overshoot to this volume imbalance if it really wants to trade down lower and reach the sell side liquidity? What do you see here? Right there. As you can see, after we broke down, it says Tuesday, Wednesday, Thursday, Friday. After we broke down on Tuesday and closed below the weekly fair value gap on the daily time frame chart, we closed below the daily and the weekly fair value gap right there. Friday we retraced all the way up higher to the high of the weekly fair value gap, which is this candle's low, right to the tick. Now, if this doesn't prove to you that there's an algorithm, that there's someone who is controlling price right to the tick, and sometimes they cannot hide their footprints. They cannot hide what they're doing. By what I'm showing you right now, you can be able to identify and spot their footprints. So you can be in sync with what they're doing. So from here, I'm looking for lower prices to reach towards this fair value gap between this candle high, this candle low. We have fair value gap, FBC, buy side imbalance, sell side inefficiency. So it's inefficient in a sell side delivery. There is no sell side delivery in that fair value gap. A lot of people are looking at this as a buying opportunity. Once price trade to that BC, which is a buy side imbalance, sell side inefficiency, they will be buying where it's wrong. I'm looking at this as a drawn liquidity. I want to see price trades to it and through it. And once we trade to it and through it, close below it, I'll be looking at this level to be treated as resistance once we retrace to it. A retracement to be considered here as a resistance. We're looking at the low and the corresponding of that level to be treated as resistance, a very strong levels of resistance, and then from there this will shoot it down to the sell side liquidity, to it and through it. I don't look at the drawn liquidity that I'm drawing here, drawing your attention to as the sell side liquidity or the sell side liquidity as levels to buy. I'm looking at these levels for as and targets as objectives. I want to see price trades to them and through them. That's my idea about drawn liquidities. So we're still looking for lower prices. Now, this gap, this candle is low, this candle is high, you'll be selling here. True, correct. But you will not be buying here because gaps are of different uses. You cannot be using the gap in just one function. You cannot be saying that every time I'll be seeing a gap, I'm gonna be buying that or I'm gonna be selling that. Because in this example, this shows you that not every gap can be sold or not every gap can be bought. In this case, this gap has been sold and you can sell here, go short because it's aligning with the context of the marketplace. It's aligning with the higher time frame context, with the other asset classes. It's pretty much aligned with the context and the high time frame narrative. But if it's not aligned, you would not be selling here. Perhaps you'll be looking for a run above this daily fair value gap and closing above it, retracing, working as treating it as support that can run up higher. But in this case, we're selling here, and this confirming to us that we're actually likely to trade towards this fair value gap right there. So once we trade down lower, this doesn't mean that you're going to be buying here. No, you'll be actually looking and monitoring it closely for price to trade down below it, closing, retracing, walking it, treating it as a resistance that can present price lower towards the sell side liquidity. That's how I'm looking at it. So that's going to be pretty much it for down. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, we have swept the buy side liquidity right there, and we rallied down, we traded down lower. We have created a weekly favor gap. This candle is low, this candle is high. But pretty much was consolidation here. Pretty much we've been consolidating here. Price took out that low. This line just to annotate that we took out that low by just a few pips, and we have this weekly favor gap. I'm expecting price to run up higher to trade inside the weekly favor gap before running down lower, taking out the sell side liquidity right there. Going to the daily time frame chart. Explaining the daily time frame chart, we traded all the way up higher, formed a high, and we've been trading in a range here. We formed a low here too. We broke down the low here. Breakout artists are looking at this as selling opportunity. Breakout artists are selling here, right there, setting their stop loss above the highs. Price traded all the way up higher, put them in loss, triggered their stop loss here, and other party, which is also a breakout artist, has bought here. They went long. And guess what? Where's their stop loss residing at? Right below this low. Price traded all the way down lower, jammed down lower. This candle traded down all the way down lower and took out this low. So now both breakout artist parties are out of the marketplace. Even this party, which traded down lower first, they were correct about the narrative that we're looking for lower prices here, but we used them here just to trade above higher to the buy side liquidity to take and use their fuel, use their liquidity to send price down lower. And you can see once we break down lower, we have these consecutive. I'm not interested in this candle specifically, to be honest, because it has a wick and it's not really, doesn't have a much body here. But I'm just looking at this one candle, one down close candle, which is my bearish breaker. Price retraced, woke inside the daily favorite gap. This candle is low, this candle is high, and the bearish breaker right there, and broke down lower. As a result, we have created a bearish order block. Price has been walking inside that daily bearish order block, pretty much consolidating. And again, if we're consolidating and you're looking for lower prices, you want to see the first break above the highs and then jamming down lower. The same concept that has been used here, it's used here too, but in vice versa. I want to see lower prices here. I want to see run above the highs here to take them out, and then jamming down lower towards the sell side liquidity. But in this case, because we're pretty much in halfway, so price can actually just jam down lower before actually running up higher. Because there's been a lot of liquidity that has been pretty much engineered here. So I think we have enough to drive price towards the sell side liquidity right there. So that's going to be pretty much it for Euro USD, also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, price is slowly trading down lower. And to be honest, I don't like this type or this form of price action here on Pound USD. So it's pretty much stagnant. It's not moving as I want it to move. I really want to see here a very strong and magnetic movement price towards the downside liquidity or downside that is closing also below the weekly fair value gap that can potentially use it to treat the weekly fair value gap as resistance once we retrace to it. Going to the daily time frame chart, as you can see, we trade all the way up higher. Consolidation, rallied up higher, took out the buy side liquidity, and we broke down lower. Bearish breaker, retracement to the bearish breaker, daily favor gap between this candle's low, this candle's high, retracement to the daily to the bearish breaker and to the favor gap, which is a SIBI sell side imbalance, buy side inefficiency. So it's inefficient in the buy side delivery. Traded down lower. This is a bearish breaker, you could call it, and daily favor gap price retrace one more time and then broke down lower. We have here an immediate rebalance where price the low and the high, the low of this candle, which is Tuesday, I believe, and Thursday are pretty much the same. The low of Tuesday and the high of Thursday, they're the same. This is immediate rebalance, which is one of the strongest pillars that you could look at the markets and see it. That's indicative of price when it really wants to break down lower and reach for lower prices. We also have for objective, we have this favor gap, this candle is low, this candle is high, expecting price trades and draw towards this level here, and this is liquidity. So that's going to be pretty much it. If you have any questions or if you want to go over any information or if you want to discuss any kind of information, please don't hesitate to message me on my socials. They're listed down in the description. Or if you have any opinions about the weekly market review, you can also be more than free to comment your thoughts about this. Don't forget to like, subscribe. Also, just mentioning that next week's review or outlook is going to be broader because I'm going to be including gold, oil, and Bitcoin as a habit of doing it at the beginning of every month, just to keep everyone informed about why what's the direction of most of the asset classes that are traded by most traders. So I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.